Welcome to the Strategic Investor. Join us as we interview some of the world's most productive asset managers and uncover sophisticated and unique investment strategies in the markets. Here is your host, Charlie Wright.
Hello and welcome to Strategic Investor Radio on OC Talk Radio, where we bring you investment strategies you are not hearing elsewhere. We'd like to welcome today, for the very first time, Ted Parker, Senior Vice President with Millenium Trust Company. They custody alternative assets for IRA accounts for private investors and advisors. Ted, welcome to Strategic Investor Radio.
Good morning, Charlie, and thank you very much.
Ted is with us here in the studio, so Ted, appreciate you being here. You've been in the financial industry for decades. Give us a 30-second background of yours in the industry, will you, Ted?
Yeah, well, absolutely. Yeah, I've been in this financial industry for a little over 2 decades, working for very large custodians, for example, like Fidelity Investments and Charles Schwab, and then also as what's called a registered investment advisor, working with wealthy people and helping them manage their portfolios.
Okay, so tell us about Millenium. What is it that you guys do?
Sure. Well, Millenium Trust Company was started in the year 2000 as a custodian for alternative investments, because what they saw was more and more investors wanted to buy alternatives, but the big custodians like Schwab and Fidelity and Pershing and TD, they wouldn't hold those for most clients, and especially wouldn't hold them in a large amount for advisors. So we were founded in 2000, and since then we've grown to about $26.6 billion under custody with over 15,000 unique alternative investments.
Okay, so tell us what makes you guys unique. What are you willing to do that the others are not, and why?
Sure. Well, the major custodians, like I talked about, they like to custody liquid assets, things that can be bought and sold on the instant or by the end of the market day. They find different creative ways to create revenue from those type of investments, and they can see them on a Bloomberg screen, and it's all traded. And these alternative investments aren't traded; they're not liquid, and most of them don't know how they work or how they're priced, so they're not revenue generating for these big custodians.
And why do people need a custodian for those things?
Sure, good question, Charlie. Well, if you were to buy some alternative investments in your Charlie Wright trust account or your checking account,
right,
you don't need a custodian for that. But anything that you hold in a retirement account has got to be held by a custodian, because our government wants to track how much we've got. When we're a certain age, you have to take a minimum distribution out of that account. So you've got to have a custodian for that.
You're talking about IRAs.
Exactly. IRAs, pension plans, profit-sharing plans, any type of qualified retirement plan.
Okay, so you guys custody the investments for qualified retirement plans. So it's not just IRAs. It's also,
Roth IRAs, simple IRAs, pension plans,
401ks,
single 401ks. I've got a client up in Silicon Valley that has about $1 billion in a Roth IRA, which is tax-free every way you slice it and dice it.
Okay, and so if he wants, he can go out and buy a mutual fund and put that with TD Ameritrade or Schwab or somebody else into this Roth IRA.
Correct.
Okay. But if he wants to buy a non-traded REIT or something like that, he really can't do that sometimes he can't do that through TD Ameritrade or Schwab or Fidelity, etc.
Correct. Yeah, and in this example, he is not buying non-traded REITs. He's buying private company stock, because that is what we call the hockey stick effect.
Right.
You just need a few of them to make that big increase in value, and that's how he turned his 401k rollover into a Roth into $1 billion Roth, because he is a venture capitalist, and he knows what he looks for with private company stock, and a few of them went public.
So somebody could take real estate, private company stock, things that these other custodians will not take, and they can come to you guys, and I presume you charge a fee directly to the investor, and then that investor pays you the fee and then gets to select among a much wider array of investments than he could with these other custodians.
Correct, yeah. And as far as the way we make money, we charge an annual contract fee per asset. And I'll give you an example. Let's say you come to me and you say you want to invest $100,000 in your IRA account in an ownership interest of this building we're sitting in today. You can do that. And we get plan documents from the building owner, and we make sure that they're not making any lofty guarantees of double-digit returns or zero return after 20 years, things like that. And we have a team that reviews those documents, and within 4 to 5 business days, we can approve it. Once it's approved, you'd open an account with Millenium. You'd wire the money from your existing custodian, Fidelity, Schwab, wherever it is, over to Millenium. And then we buy that ownership share of the limited partnership of the building for your account.
Okay. And so give us a couple of examples. You mentioned your billionaire client. Mm-hmm. Do you guys have to approve the investment? But it sounds like the due diligence is pretty basic.
Yes, our due diligence is limited to our ability to act as a custodian. And I'll give you 2 examples. We had an advisor in San Diego who wanted to buy an investment from a Hong Kong investment sponsor. The sponsor sent us their plan documents, the private placement memorandum, statement of good standing, all those documents we have to collect. And there was one sentence in the 48-page PPM that said the custodian was responsible for any actions of the investment sponsor. So that means if the sponsor stole your money, we'd be responsible for that. So we told this Hong Kong investment sponsor, thank you, but no thank you. We've also seen documents where somewhere buried deep in the PPM is a statement where the investor is being guaranteed zero return of principal after a number of years, which essentially means that the investment sponsor could steal your money again. Yeah. So we just say for that, no. Okay. We don't pass any judgment on the value of the investment. We just want to make sure that you're not going to be victim of a Ponzi type scheme,
right,
or a Madoff scheme,
right. So what are kind of the typical situations when people come to you, mm-hmm. okay, and they say, "This is what I want to do"? What's the kind of thing they're looking at doing?
Typically, we find out who the investment sponsor is. That's the organization making that investment, and then we contact the investment sponsor and collect the required documents. It's all done through online portal where they upload the documents, and we've got a team back in Oak Brook, Illinois, where our headquarters is, that knows what they're looking at, and they, within 4 to 5 business days, they'll make an evaluation of whether or not we can custody it. And I said we custody over 15,000 of these alternative investments, so we know what we're looking for. Very rarely do we find something that we won't custody.
Okay, and so what are some examples? Okay, this one guy was involved in stock of private companies. Mm-hmm. What are some things people want to do that they can't do outside?
Sure. Well, there's a lot of people in America have made a lot of money with commercial real estate, a lot of money. And about 5 years ago, a company up in Portland, Oregon, by the name of CrowdStreet, had this idea that why don't we create an online marketplace for investors who want to invest in commercial real estate? And in 4 years, they've transacted about $10.8 billion of real estate sales, all online, where they've got investors all over America going to their website, buying $25,000 minimum allotments on a property in Atlanta, Georgia, something like that.
Yeah, Ted, we've interviewed some of their competitors, mm-hmm. So we're very familiar with that model here.
Other examples are, ever since the banking crisis of 2008, a lot of ingenious business owners have come up with these peer-to-peer lending investments, where you can loan part of your IRA money for a fix and flip, where somebody wants to buy that property and fix it up and flip it, and they're going to pay you anywhere between 6 and 8 or 10% interest for the term of that note, which is typically no longer than 18 months.
Right. We call that private credit. But
right.
Yeah.
Exactly. Yeah. Private credit, private debt. But that's just a booming market all over the world.
It is.
Peer-to-peer lending is going on over in Finland, Singapore, Hong Kong.
We've interviewed several companies who do that kind of thing, and like you say, they're going to pay 3 or 4 times what you're going to get in a regular bond index.
Well, and if you're looking for income, a 10-year Treasury is 2 and change. Plus, you've got the impact that when the Federal Reserve says something, it's going to affect that value, or when Trump tweets something, it could affect the value. But the interest I'm earning on my first trustee notes is unaffected by any of that.
That's right. Okay, so what do you find to be the biggest misperception when you're explaining these things, either to advisors or to investors?
Yeah, great question. The biggest misconception is people just don't know you can put these things in your retirement account. And I'm talking about people that are what we call investment sponsors. I meet with real estate developers all over the Pacific Northwest that are building beautiful buildings and properties, and they've gone to all their friends and family to get investors in that, but they've never talked to them about their friends and family's retirement accounts. And when you ask them why, well, you can't put commercial real estate in your retirement plan? Well, of course you can. Ever since 2012, the Jobs Act, that opened up the ability for investors like you and me to be able to invest in things like private real estate, private stock, these crowdfunding investments that we're seeing these days.
Okay, and so people are basically just unaware of this.
Exactly.
Okay.
And a lot of what Millenium Trust does is, because we understand that the biggest obstacle to alternative investments is learning about them. You can talk to your friends about it, but you're not going to get always the right information. So we created a website called the Millenium Alternative Investment Network. It's an online resource for investors to learn about alternative investments, to research the ones they're interested in, and actually open up an account and invest in them with us.
Okay. Now, maybe you could take just a second. When you say alternative investments, there are going to be some of our listeners who are going to say, is this baseball cards? Is it diamonds? Well, what are alternative investments according to the IRS's view, TD Ameritrade's view, Millennium's view, et cetera?
Sure. I had a meeting yesterday in Orange County with a billionaire family office that is a billionaire because of alternative investments. They've accumulated individual precious coins, collector coins.
Numismatic value stuff.
Absolutely.
Okay.
Yeah. And I saw coins there, little gold coins that were valued at over $3 million because they only made 8 of them or something like that.
Okay.
That's an example. But basically, the types of alternative investments, these are things that are not traded in the stock market. And when investors if they can think about the value of their home, it's not in their stock account, and that value fluctuates daily. And whenever anything happens in the market, it doesn't really affect the value of their house. Examples of true alternative investments include private company stock. It's called private equity. Private company debt. They can also raise money through debt offerings. Real estate, we talked about that. And you can buy a liquid real estate investment, a liquid REIT, but that's going to be affected by statements by the Federal Reserve. When they talk about raising rates, that hurts those type of investments.
REITs are publicly traded stocks, is what they really are. Yeah,
exactly. And you can buy private REITs that aren't affected by that. So when the market takes a dump, these private things don't move. Other examples include managed futures, precious metals. You can put physical precious metals, silver dollars, coins, bars, bricks, palladium in your retirement account. And then multi-strategy, things like hedge funds. I've seen notes tied to legal settlements. A law firm spends 10 years suing Philip Morris, and they get a several $billion settlement. They don't want to wait several years to get that payout. They don't want to get it over 10 years, which typically is how it's structured. So firms go in and they create an investment out of that where they take a discounted value of it and they pay that off, and then you and I as investors can participate in that legal settlement. And
you guys are not involved at all in the investments other than doing some due diligence to make sure that there are not harmful statements in them, correct?
Absolutely. Yeah, we cannot make investment recommendations, but we can approve all the plan documents.
Okay. So you're kind of like an escrow company in a real estate transaction, which many of our listeners are going to be able to relate to.
Yeah,
you're not involved in the investment at all, but you take care of the required paperwork that is required by the government.
Absolutely. And one of the things you have to do with retirement accounts, you have to get an annual valuation. And that's why a lot of big custodians won't invest in these things, because they don't know how to get those valuations.
Right.
Well, there are firms out there that do this. If you're a private company stock, you hire one of these firms to do a valuation. If you own one of the high rises here in Orange County, you're not going to get a full appraisal every year. But if you have any investors who have ownership shares through their retirement account, you have to get a valuation. And there are firms that do that.
Okay. And so what objections do you run into? I mean, the first issue is they're not aware of this. Once they become aware of it, what problems do people have with it?
Mm-hmm. Well, a lot of these private investments, you have to be an accredited investor to be able to invest in them.
Right.
So if you're unaccredited, there are still choices, but you're limited. And we have a few sponsors on our main platform that accept unaccredited investors. Another objection for advisors, really, when they want to put these in client accounts, typically clients have to sign individual paperwork for these alternative investments. And most advisors don't like paperwork. A lot of us don't like paperwork. But it's the nature of the beast. If you want to invest in these alternative investments, there's extra paperwork to sign. And we try and digitize all of it through technology like DocuSign and API. So all of our transactions with clients and advisors can be through a completely online process.
And is there a way that someone could get into trouble with the IRS over this?
Well, there are regulations about what you can put in a retirement account. For example, some people come to us and they say they want to put a house that they bought in their retirement account, and one of their kids is living in that house.
Okay.
Well, the IRS has regulations about things like that. You can't get a personal benefit out of investments you put in your retirement account. Furthermore, I've heard stories of people who put primary residences in their retirement account, and then they've paid for repairs, utilities from money outside the retirement account.
Okay.
You can't
right.
do that.
You can't mix and match.
No, the retirement account has to pay all the expenses associated with that real estate within the retirement account. So you've got to have liquidity there.
Okay.
And then if you have to get your minimum required distribution because you're 70 and a half, you may have to sell that private real estate. And if it's not the good time to sell it,
you got to have the cash.
Right, exactly.
Okay, so if you have a $250,000 account, you can't go out and buy an asset worth $250,000 if you've got RMD or potential repairs or expenses, et cetera,
property tax, everything.
Okay.
Right. Yep.
Gotcha. Okay. And so you guys take care of all the paperwork and everything. You're not involved in the investments at all. And you charge a fee to set it up. And then obviously, I presume you charge an annual fee to take care of it.
Well, the only fee that we charge is an annual contract fee, and that's charged within 60 days of account opening on an annual basis. And for any old run-of-the-mill alternative investment, let's say you come across a private company stock, you want to put that in your retirement account, our basic fee is $350 a year. That's charged within 60 days of account opening, and you can even tie a credit card if it's debited from the credit card.
Okay.
If you buy another investment on top of that, it's another $100 on top of that, and that's capped out at $650 a year.
Okay. So somebody could have 22 investments and pay you guys $650 a year.
And if you put $1 billion in that private company stock, you'd pay us $650 or $350 a year.
$350 a year. Huh?
Yeah, it's that's the annual contract fee.
We've
got over 1 million clients, and we've got $26.6 billion in custody. So we're doing okay.
Yeah, and so somebody cannot put these non-tradable, let's call them, alternative assets into an IRA without somebody like you.
Correct. You've got to use a custodian for any qualified assets. Again, because the government wants a report on that, we have to get the annual valuations. And
okay. And so are advisors well aware of that? I've known about these things for years. I've used them very little, but I've known about them.
Yeah, more and more advisors are learning about them, and they're trying to differentiate their practice from the competitors. by adding these. I had a meeting with an advisor here in Tustin, California last year who decided he was going to replace all of his corporate bond funds with private credit, private debt. And he brought an investment sponsor from L.A. in to talk about this, and he had about 40 of his investors in the conference room, and the advisor got up and talked about what happens when the Federal Reserve starts raising rates, how that affects corporate credit. He's concerned about that. And then he had the investment sponsor come up and talk about fix and flip first trustee notes, the benefit of that, how they're going to be earning anywhere between 6 to 9% on these short-term notes backed by hard real estate. And the advisor got back up and said, okay, we're going to probably make his and her allocations in your retirement account, about a 10% allocation is first trustee notes. And if you have a trust account, a 10% allocation there. And the hands went up. I want 15% in mine. I want 20% in mine.
Of course, yeah.
Yeah. And because they were earning maybe 2 and change on the corporate credit or government debt.
And let's face it, especially here in Southern California, people trust real estate.
Yeah.
And you're talking about first trust deeds on a real estate property. People trust it rather than a bond to some company nobody knows and it pays 2.5%.
Right. And, you're talking about some of the challenges and misconceptions. This whole process of peer-to-peer lending has become so customized and so perfected that you don't have to have any involvement about searching for the loans and dealing with someone who doesn't pay their payment. There are people that manage this whole process for you, and they're willing to charge a fee for that, but you're getting a return well and above what you can get anywhere else in a credit asset.
Yeah, that's right. And again, we've interviewed several of those, and there are lots here in Southern California and elsewhere, and they tell a very compelling story. Mm-hmm. So, Ted, a question we'd like to ask all of our guests here. What keeps you awake at night?
Well, not a lot. But
you're a fortunate man, if that's the case.
I've been a 2-decade owner of alternative investments in my investment account. So when the market takes a dump, of course, I've got risky investments in the stock market that take a dump. But the alternative investments act as a shock absorber and have protected my portfolio. My real risk, things that keep me awake, is headline risk on company stock I own. Yeah.
And there seems to be plenty of that these days with tariffs and, China trade wars and the like. And this week, missed earnings. And, of course, airplanes that fall apart that nobody expected, right?
Right.
So, it's a challenge. Also, a question we'd like to ask every guest, what book on investing would you recommend?
Yeah, I've got a book here, a gift for you today, called The Alternative Answer, the non-traditional investments that drive the world's best performing portfolios. It's by Bob Rice, an editor of Bloomberg TV. And incidentally, most institutions have about 53% of the portfolio in alternative investments.
I've seen that several times.
Yeah.
That is the case. When you have professionals involved, the percentage of investments in alternative investments increases dramatically.
And the 2 biggest parts of that alternative is private real estate and private company stock. And they all credit the extra return, the alpha, we call it, to the private company stock they own. And we have 2 other books I'd like to recommend, and these are ebooks you can find at millenniumtrustcompany.com, where you can just type in the search menu for ebook. One is geared towards individual investors, called Our Alternatives Right for Your Portfolio, and it goes through and it helps educate you about the types of alternatives that are available, helps you learn how to research them. And then you also have one designed for advisors, Our Alternatives Right for Your Client's Portfolio. And we've got a dedicated team to support advisors in their quest to add alternatives to client accounts.
Okay, so again, quickly the process again of finding those.
Sure, you go to mtrustcompany.com. Once you get on our main platform, you'll see information about the investment network. That's where you can learn about alternatives, you can research, and you can open up an account. But up in the search menu, just type in ebook, and you'll be brought over to the 2 ebooks I just mentioned.
Okay. So, final words for our listeners here. Oh, well, first give us your website and contact information here.
My name is Ted Parker with Millenium Trust, mtrustcompany.com. And words of wisdom, If you're an advisor and you're looking to differentiate yourself, clients will talk about these investments. So if you want to increase your referral source, add some alternative investments.
Great statement. Our show is all about alternative investments. We're into 4.5 years now. We've had over 350 interviews. None of them are as good as yours, Ted. But, they were on the build-up up to you. And no question about it. There are alternatives. There are opportunities today for investing. Didn't exist 5 and 10 years ago.
No.
And almost every month they're coming out with different ones, but they're not all brand new either.
Right.
And so the opportunities there are significant. And again, the Jobs Act of 2012 really helped there. And we've even got Paul's attention here, our producer here, so for the whole thing. So, Ted, thank you very much for joining us. Our best wishes to you and Millenium to continue. How many billions of assets was that?
26.6.
26.6 billion. That would last the state of California at least a couple of hours, So thank you very much for joining us. Appreciate it, and best of luck to you, Ted.
Thank you.
So again, we've been talking with Ted Parker with Millenium Trust Company, and they custody alternative assets for IRA accounts for private investors and advisors. You've been listening to Strategic Investor Radio on OC Talk Radio, where we bring you investment strategies you are not hearing elsewhere. We'd love to hear from you. You can reach us at info@strategicinvestorradio.com and go to our website to hear podcasts of all of our interviews and shows, strategicinvestorradio.com. I'm Charlie Wright, wishing you an enjoyable week and productive investing.
Strategic Investor Radio is a production of OC Talk Radio and is provided for educational purposes only. Content of this program and the views of the guests should not be considered as recommendations by OC Talk Radio or investment advice from the host Charlie Wright or any other entity attached to this production. Investors should always consult qualified financial, investment, tax, or legal professionals prior to investing.